Welcome back to Silver Rule Radio this week with Miles.
No. Unacceptable. Whatever makes you happy, Tori. This is what I get for letting you take a vacation last week.
No.
Silver
Rule Radio. Now, I say that just because talking off the air here with you guys, the focus has been on silver. And despite a really obviously dynamic week going back to your guys' show last week, which was so good, every listener needs to go back and review last week's program that Miles and Rob did. However, this week, gold is still exciting, but silver is what we're so intrigued about. Rob, you started this conversation. I'm going to throw it at you here.
Well, I think looking at Miles's charts, we have a bottom trend line that is very intriguing, and I'm curious as to how Miles wants to chart what silver is doing and what we can expect. Because we're at $25 an ounce right now. We are solidly above 24. We talked about that last week. Miles, what's your chart saying?
There are actually a couple things. All right, I'm going to do it 2 weeks in a row, Rob. I'm going to be optimistic, and I'm doing it with Tori
I get to
here.
witness this one live.
It's terrifying. I'm not in my comfort zone. Okay, there are actually a couple things here that from the way I look at charts, I'm more of what you would consider velocity and supply and demand oriented when it comes to how I look at charts. How is the market reacting? How are large swaths of people reacting to how the market is progressing and where those price levels are? So with that being said, we looked at some compression within silver last week, where I was dating back to a relatively short time within the silver market, where I'm looking at the high we put in back at the beginning of 2022, the decline through 2022, all the way down to 17 or 18. I mean, it was a pretty steep drop from 27 down to 18, and the bounces that we've had back and forth as it's been climbing its way back up. So when you look at the top end, we've drawn a pretty consistent declining ceiling. So a compression on the top end. When you look at the bottom end and you take into account some of the declines we've had there, we're failing to really get back to some of the bottom levels, and we've had to sort of stretch and flatten this out a little bit to make some of the floors line up as far as the bottom end of the trading range goes. So one thing I'm looking for here, every time we touch the top, are we coming back down to touch the bottom? And I would argue that in this last time we came up to the top end of this trading range, which would have been the beginning of December 2023. So we're talking a few months ago. We came down, but did not make it down to the bottom end of this trading floor until we've turned back around and we're on our way back up to the top. So from a short-term perspective, it is arguable that we're seeing some semblance of a bullish flag here to where we could see a breakout above this declining ceiling, which right now, if we jumped up to it today, would be around $25.50, only about 45 cents above where we're at, following on the heels of what gold's done.
And that's not unusual. I think the silver-gold ratio right now is about 87 to 1. So it is starting to compress a little bit there as well.
Yeah. So having done that, I now want to turn to somebody else, because I don't only want to listen to myself, even though it's really hard not to sometimes, because I do a lot of talking. So another guy in our office who spends a lot of time looking at charts and has been in here in the recording in years past, Eric, has been going through some longer points on the silver chart and has taken us back to the entire move since COVID. And you see a very, very similar pattern in that entire move since COVID, in that we had our high, we've come down, we've established a wedge, we've come back up and played around that wedge, but tried to push through it a couple times. We tried to push through it back in December, that high I just mentioned a second ago in the short term, and we just pushed through it again today. So we've had a couple pushes back above, and like I mentioned with the short-term chart, we seem to be failing to come down to the rising floor.
Bummer.
So it seems like the reason I'm bringing this up is what we're seeing is the psychology of silver is banging on the ceiling a lot harder than they're banging on the floor. In fact, in a number of cases, they haven't even made it back to the floor. So you're seeing a lot more bullish pressure, a lot more bullish volume and velocity trying to push silver up to a breakout above the ceiling and to higher pricing than you are on the downside trying to push silver down. So I think there's definitely a story to be told here with silver. And then you bring out, Rob, what you just said about the ratio play and moving from above 90 back down into the 80s, even though gold is screaming and has been. We talked about that last week. Gold being at all-time highs, that's old news. This week it's silver. And I think there's a good shot that we see something significant happen in silver to play catch up as gold probably starts to take a little break here after the significant rise.
And Miles, adding to what you just talked about in terms of the silver and the silver gold ratio, there's another point that Eric, going to give him a lot of credit this week, also brought up. And that's 3 times in the last 5 years, the silver gold ratio has touched 90 to 1. And each of those 3 times, silver has gone up from that point, either 20%, 40%, or 70% from that moment. So that adds further weight to our hope that we are finally seeing a for real silver breakout. The big question I have is, where are we going to start hitting some headwinds for silver? And we talked about that last week, 26 and 28. If we can break above 28, where does that take us?
Yeah, well, 26 obviously is going to be your first line of defense, and it's going to be pretty tough. That's really been the ceiling here for the last almost year. And we've bounced up against it a couple times in the last year. And that's where the breakdown started. When silver took that big dive I mentioned down to 18, that's where it started from. So that's going to be a pretty hard line in the sand. When we clear away this compression and we just start looking at the step ladder that is pricing, 26 is going to be tough. I think 28, 29 is going to be pretty tough too. You know, that's the highest price we had seen in silver since 2013. And it took COVID to cause that to happen. So there's a couple contenders on silver's way to being champ. It's not going to be a bunch of glass-jawed fighters. There's some real competition there. But to answer your question, because I think Rocky Silver Balboa ends up winning those fights, honestly, next ceiling for me is all the way up at 35.
That would be amazing.
That would be. And I'll tell you, Rob, what you brought up is key to me, because we do want to know not only what are we looking at performance-wise, but it helps with entry points. And for some people, maybe even a selling point, like a target to trim a position. And you guys touched on that briefly last week. But if we go back to early February, now we bottomed, as Miles' chart shows, just under 22, so around $21.90. And here we are at 25.06 as we record. This is a big day. I mean, we're up from 24, which was right at that long-term resistance line. That $24 figure is a very long-term, like 40-year significant number. The 25.06, that's a 4% increase today. But what it also represents today is we're up 14.5% from that February low, which is also the first time we crossed that 90. So we got to 92 to 1 on the ratio, and we're already there. And so if in fact we go to 35, that's a 60% increase from that February low of when we hit that 92 to 1 ratio. And it doesn't even have to go that high for it to be a very exciting, justifiable breakout in a sense. And Miles, I'll also ask you to maybe look at what gold's breakout has done. I mean, I know we're beating silver's drum here today, but since your recording last week, we hit a new all-time high. So 2,190 can't go unspoken of. And so in terms of that type of a breakout, you had shown some really good figures last week. Has anything changed in terms of that roughly 2,300, 2,350 figure on the short and intermediate charts for that potential ceiling? Have we exhausted it? Did we see the whole run? What are you thinking there?
You know, my extrapolated out highs aren't really going to change because they're kind of based on how pricing had moved previously and where you could see retracements. You know, when you take your 2 steps forward, you arguably take 1 step backwards.
Yes.
Whether that step is a third, a half, 2/3, whatever the number is, you usually take some semblance of a step backwards, reload, and get ready to go again. So short term, This is a big move. I mean, we're talking in the very short term, 1990 to 2190, $200 in what, a week, 2 weeks? So we're talking a pretty significant move, and we may short term see a little pullback here. Longer term, getting up to those 2400 mark. One of the reasons I picked that number was because where some of the retracement levels would fall, that lines up with some of the highs and lows that we've seen previously through the years in gold. So the 2350 mark wouldn't change too much for me. But short term here, and this is what I think might be kind of interesting. We just had a $200 rise in gold, and over the last day or two, we're showing a little bit of topping action, or at least it's going to stall here. I can't imagine gold's going up another $200 in the next few weeks. So let's say we get a little healthy correction back down, like a 50% retracement. So that would take us back to like 2090. So we're still sitting really above the previous all-time high, going back 10 years ago, 12 years ago. Well, let's say we get to 2090 and silver, which tends to lag behind gold a little bit, let's say silver shoots up to 35. Well, guess where that puts our ratio?
Well, hold on. I got to take my boots off to do the math.
Okay. Yeah, count your toes, Rob. That puts our ratio at about 62. Well, Tori, we've talked about this for years, right? How the gold-silver ratio has slowly been rising over the last 40 years. So you look at your median gold to silver ratio, and it's, I think, what'd you calculate? Was it high 50s, low 60s, somewhere in there?
Yeah, 50-year average is about 58, and the 40-year average is about 60. And so that takes us right in that rising channel, like you had pointed out even 2 weeks ago. I'll point the listeners to the program from 2 weeks ago and that image. That's so good. And you guys, this is what the silver catch-up looks like. I'm not saying it's definitely happening. We're talking a lot about it because it could be happening. And especially if we break out of that top end of that channel and we get a strong close above 26, a close above 26 would be really fun to start to see what happens, because the ratio is down to 86.5 to 1 from that 92 in a very short period of time, with gold getting all of the attention. It's gold at an all-time high, and here's silver exactly 50% below its all-time high. It has so much upside potential.
And that's what silver does.
And here's this gold run from 2080, which was our previous high, to the new all-time high was a 5% move. And everybody around the world is talking about it, right? We get sucked into dollar figures, and we can't do that. As the numbers get bigger, we have to remind ourselves, we have to focus on the percentages and the ratios. That's a 5% move in gold. And here we are today, 4% in silver in one day. And that's the type of dynamic that it's going to be looking like on a consistent basis.
Well, in this particular move, Rob, a second ago, you pointed out how Eric had noticed the types of percentage gains in nominal terms, in dollar terms that silver puts out. What was it, 20, 40, and 70% respectively?
Yeah, actually higher than that. I'm rounding down, but yes.
So we're at 12 currently on this silver move. So silver, if it's going to follow that pattern, silver still has at least 8 or 10% to go.
Oh, yeah, even more than that. Yeah.
And that's going to put us right up in there. You know, another 10% on silver, and that puts us at 27.50, 28.
28.
Now we're scraping the previous highs, or at least the trading range at the previous high. So it can all happen pretty quickly. And the funny thing is you don't need silver to go to 100.
No.
You just need a little bit of relaxation in gold and a little bit of catch up in silver, and it's amazing how quickly that can shift.
Well, and the inflationary environment is supporting it. Silver needs that. Commodities in general, you know, as you get an inflationary type of undertone, that's a key fundamental for the white metals, not just gold. Gold can do well in deflation, right, Rob? I mean, you've seen some of the, in your years, some of the best performances in a deflationary environment. But this inflationary environment is good. And the CPI came out yesterday morning, and it's 3.2%, which means inflation is up 3.2%. Just because it's a lower number from where it was does not mean we have that deflation yet. The core CPI was 3.8%. And things that aren't changing, I mean, housing continues to climb, and food actually was relatively flat, believe it or not. Energy hasn't even weighed in yet. And so that's not good for the Fed. And you guys, that's now caused the odds of a March rate cut by the Fed on the Fed funds rate to 99% no. The odds are that it's just not going to happen. Well, what it also has done is caused the prediction for a May cut to go way down to only 14%. Again, an 86% chance that there will not be a rate cut in May. That doesn't bode well for the stock. So despite those numbers coming out higher than expected yesterday, the stocks somehow find a way to rally. That tells me that we're in this crack up boom type of an environment where there's just a manic buying. And I will plead with you listeners to go back and again look at some of the data from last week's show. Stocks are just not the right place to be right now in terms of general indices. You can certainly make a lot of money on the volatility, even in shorts or something like that, but just be very, very careful. And this is, again, a really good time to diversify in your investment triangle into a cash position, into a gold position, now with silver, and bringing some balance to those equities, because this is really tantamount to the viability and health of your portfolio.
To follow up on something that Tori's talking about, a crack-up boom in the stock market always leads to a sell-off. And during a sell-off, gold does not favor very well, at least for a few days, if not a few weeks. I'll remind our listeners, if we go back to the big sell-off, 2008, gold was at 1,000, it fell to 750. It took 6 weeks for physical gold. I mean, I had a phone call from a client. He wanted to buy Krugerrands. He wanted to buy 50 Krugerrands. And I told him they're 1,050. And he goes, 1,050, gold's only $800 an ounce. I'm like, well, that's the paper market. What, you're charging me $250? I'm like, commission? I'm like, no, I'm charging you a $50 commission. Krugerrands are now, just being able to buy bullion is a $250 difference between the spot price. And we saw the same thing during the COVID panic. We had a sell-off in the stock market, a sell-off in the gold market, but in less than a week, the price of physical gold went higher, and you saw that separation between the futures price and the physical price. So if we do see a sell-off in the stock market, we will see a sell-off, at least in the futures market for gold. And if silver holds its ground, that ratio could get even tighter and really make for a great opportunity. We saw some great ratio trading opportunities during the COVID panic.
Oh, we sure did.
Oh, yeah. Well, how many people during COVID were willing to pay $35, $40 an ounce for a silver American Eagle? And that's, most of our clients or listeners will probably know that we were not interested in the product at the time.
Right.
If you can buy 100 ounces,
right,
buy a bar.
And we did.
Because the supply and demand curve, anybody who's been in gold for a long time, and we're probably preaching to the choir here, given our listeners, but we all understand that the supply demand curve for physical deliverable gold and silver is very different than the futures market. But the problem is it's the people that come into the market for the first time ever because of those catastrophes that take place that don't understand that, even though they're the ones causing it.
And they get upside down really quickly.
Yeah, and it's amazing how quickly it gets upside down. And I know all of our listeners remember, because most of you guys were buying silver in 2020, 2021.
Yeah, that's right. And start to look at what's going on now.
Yeah.
Who's buying what? The other thing that you can do is just watch what the big players are doing. Let's take the ultra wealthy, for example. What are the ultra wealthy? What have they been doing the last 3 and 4 months? Selling their own shares. Mm-hmm. So Gates, Bezos, Jamie Dimon of JP Morgan, Zuckerberg, they're dumping shares. And that tells you right there that they believe that their share value is either overvalued or topping, expected to turn down, because this is hundreds of millions and billions of dollars. And on top of that, what else are the ultra wealthy doing? They're buying up land, and they're buying hard assets.
Yeah, farmland.
Yep.
Yeah.
And they're moving
Ranch
into
land.
physical gold. So if the ultra wealthy feel like that's all justified, why wouldn't we be mirroring that in our own small portfolio and doing exactly what they're doing? Trimming a stock position, adding to hard assets in various forms, tangible items that are going to do very well. Because remember, commodities prices are depressed right now. Equities prices tend to cycle differently than commodities prices, and they take turns, and it's going to be the commodities that go next. It's not just gold and silver. Energy, like we talked about earlier in the show, is really just not that high. It's been stable. Yes, crude oil's up 10% so far in 2024, but it's right back where we were in August of 2023. Not a whole lot of change. So eyes on what they're doing, and that's on top of countries like Russia unloading 100 billion in U.S. Treasuries, China dumping U.S. Treasuries. The Treasury market tanked yesterday on this EPI news. The bonds tanked, and somehow stocks went up. Gold reacted the way it should, going down because the odds of a rate cut decreased. And we're back up today in very bullish fashion over 2,170. And I'm feeling really good as a gold advisor and as a gold owner.
So that's going to be it for Golden Rule Radio this week. As always, we appreciate you stopping by. If you'd like to learn more, swing on by our website at McIlvaney.com. You can find us on Facebook at McIlvaney Financial. We're on Twitter at ICA Gold. And better yet, why not give one of us a buzz? Talk about your personal portfolio. We can be reached at 800-525-9556. Thanks for listening and have a great week.